Market set to open lower this morning as real yields continue to rise here. What does that mean for you and your money? That's up next on 3 Minutes on Markets and Money. On Friday, the markets did sell off and retest that running kind of trend line from the October lows of last year. Now, the good news is the market bounced nicely off of that, actually finished positive for the day, but it was a sloppy open. This morning, stocks are looking to open sloppily lower. Once again, we're going to come up, retest this lower support trend line today. It will be important the markets are able to hold that through today, really this week, and hold that bottom support line. The good news is that the sell signal that's currently keeping the market under pressure here is starting to get more oversold. So again, if this money flow sell signal begins to turn here over the course of the next couple of days, we could very well start to see a bottom forming here between these bottoms that were set in December and these tops back in October, November. So again, there's some decent support right here for the markets to hold on to. And if we can get through that, the market should have an opportunity, because we are oversold here on a short-term basis, an opportunity for the markets to try to rally here. Now, I doubt that we get back to all-time highs in the markets. We may have actually seen the highs for the market of this year. We'll see, because with the Fed becoming more aggressive about monetary policy, that's going to start to really kind of pressure stocks, particularly on the growth side of the ledger. The problem is short term is that energy stocks, bank stocks, etc. have all had a very big rally going into this year, and growth stocks, utility, real estate, tech, those have been under a lot of pressure. We should see a short-term rotation in those sectors that'll help lift those areas up, give us a better opportunity to reduce exposure to the growth side of the ledger and start to focus more on the value side metric of the market. Again, utilities, real estate, things that people have to pay for every single month, staples, those are going to be areas that will likely do better as we move further into this year. Inflation is likely going to peak here shortly. We'll start to see some relief on the inflation side of the ledger. That will start helping stocks more on the staple side of the ledger as well. So again, be looking at your portfolio. Don't make a big knee-jerk reaction move here because the markets are oversold. You're going to have a rally here at some point, maybe not today, maybe not this week, but we are going to get a rally here that does potentially give you a better opportunity to rebalance that risk in your portfolio. I encourage you to do that, because we are likely going to have a much more challenging year in the markets. We've got a lot of information coming out on that later in reports on our website. But go to our website today. We have a report up talking about the January effect and what happens when markets tend to underperform in the month of January, what the rest of the year tends to look like, of course, and also what this near-term kind of market setup looks like potentially for a short-term rally. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.